Data company Databricks has $1 billion in funding ahead of a likely IPO in the not-too-distant future. Even more valuable, it has the buy-in of the cloud's business elite, with Amazon, Google, Microsoft and Salesforce all putting dollars behind their support. Franklin Templeton led the Series G funding round, which values Databricks at a post-money valuation of $28 billion. Other investors with public market credentials joining the raise were Canada Pension Plan Investment Board, Fidelity and Whale Rock Capital. But from a strategic standpoint, it's rare to see a cloud startup have all four cloud titans in their camp. Amazon Web Services, Capital G, the growth equity arm of Google parent Alphabet, and Salesforce Ventures are backing Databricks for the first time, while Microsoft joins a group of existing investors including BlackRock, Coatue, T. Rowe Price and Tiger Global. News of the pending funding round was first reported by Eric Newcomer. Databricks plans to use the funds to accelerate its international presence, CEO Ali Ghodsi said in an interview. Such investments are costly, Ghodsi says, requiring businesses to adapt to local data regulations and storage requirements, while also localizing the product and building out staff on the ground. This lets us really hit the gas and go aggressive in these big markets. It's almost like starting the company all over again, he says. The funding comes as Databricks, which provides data analytics and AI tools to businesses, has passed $425 million in annual recurring revenue, or ARR, growing more than 75% year-over-year, the company says. Built by a group of University of California at Berkeley academics and researchers on top of an open-source analytics tool developed there, Apache Spark, most of Databricks' 5,000-plus customers are small, but the majority of its revenue comes from enterprises like Comcast, Credit Suisse, Starbucks and T-Mobile. They use Databricks for what Ghodsi calls a data lake house, a twist on the traditional data warehouse or data lake. Companies can store structured and unstructured data within Databricks, then layer business intelligence tools or machine learning ones easily on top. In recent months, Databricks broke out its revenue for different use cases on its platform, such as data science and business analytics, as separate verticals. If you're a one-trick pony, you invented this cool thing that has product-market fit, then you just build this go-to-market machine around it. I think that's a risk, Ghodsi says. That also explains why Databricks, even at a $28 billion valuation, preferred to stay private for now. Ghodsi points to when the company launched a data management tool called Delta. The product was rolled out to customers at no additional cost, hurting Databricks' numbers in the short term in pursuit of long-term upside. We're enjoying being private for now and trying to get as much of the strategies landed before we go public, Ghodsi says.